Let's talk J.P. Morgan, Morgan Stanley, Wells Fargo, all set to report financial results tomorrow. We need an analyst. So we have Betsy from Morgan Stanley, Global Head of Banks and Diversified Financial Research, U.S. large cap bank analyst. There's a famous book called 8 Days in May. I think it's about World War II and the end of World War II. This was 8 days in April, wasn't it? It was since it's exactly 8 days.
It has been. After
it happened on the 3rd, on April 3rd, the day after Liberation Day, you pointed out you knew tariffs were coming, but nobody knew this crazy formula they were going to use and that it was going to be set so high. And at that point, if it had continued, you were forecasting a bear case of a moderate recession.
Yes,
is that
that's right.
Is that off the table, or?
Well, we have to see how it rolls from here.
Yeah.
And maybe 8 days will become, 16 days.
Yeah.
Let's see how it rolls.
Right.
Yes.
Anything in the results that we're going to see that will already be apparent from the 8 days in April?
Well, I think the outlook will be changing. So results itself, I think, will be very good, solid. We've got great trading numbers coming our way, and banking's in line. But, it's going to be one of the best quarters that never mattered, right? Because it's all about the outlook and what's happening from here.
I mean, obviously, the past 3 months, we were waiting for something like this. And there are people that said that already business leaders were, pulling in their horns. The uncertainty was causing them to act differently. But you don't think we see any negative look back? The past 3 months are going to be positive for the banks.
Well, what I would say is it's going to be solid. We'll have solid earnings. And we did see during the quarter loan growth picking up a little bit. We ended with 3% loan growth, year on year. Not bad from where we started. But look, the uncertainty about what your input costs are and how much you should invest in that is real. And I think what we'll hear from CEOs is how their customers are thinking about reacting to all of this.
It's kind of interesting how the banks themselves are reacting to it, though. Are they going to be tightening their lending standards? Is it going to be harder to get a loan out of a bank, whether you're a consumer or a business?
Right, exactly. These are the questions we'll be asking, Becky, definitely.
Yeah.
My sense is that they will say they're not tightening standards, but
do you believe
given the situation, fewer people will cross that bar. Right. So maybe that
feels like it's a higher bar, just
yes.
out of caution that the banks would naturally fall into after a situation like that.
It will be great discussions starting Friday, definitely.
I like your stock picks. You don't like those competitors to Morgan Stanley very much. No, I'm kidding. But you got an equal weight on Goldman, equal weight on J.P. Morgan. You do like Citigroup, though, quite a bit. Go through who the big winners and the sort of average banks are.
So our rating, we do have an overweight on Citigroup. We have an overweight on Bank of America. And I am equal weight on J.P. Morgan and Goldman Sachs.
Right.
And the reason for being overweight on Citigroup is a view that with the stock trading below book and below tangible book right now today, they can buy back the stock in a very, very, very accretive way and drive that ROE towards their goal of 10%. And right now, the ROE is below that. And the stock is trading below book and below tangible book. As they execute on their plans of taking share in M&A and ECM and banking, as well as getting more efficient across their platform, we do see them marching up towards 10% ROE over the next several years. And with that, the price-to-book multiples should expand. So it's a valuation call on Citi, as well as they are executing on their program to drive up their ROE. J.P. Morgan, great firm, just really knocking it out of the park in so many ways. The valuation's a little more expensive, though. It's trading, much more richly, and it's really a valuation call, Joe.